Well, the subcommittee will come to order. I'd like to welcome everyone to the Agricultural Appropriations Subcommittee's first hearing for FY 2017. Also would like to recognize that we have a new member of our subcommittee that's now officially on board, Mr. Palazzo from Mississippi. He came to this subcommittee right after I think we finished up the hearings last year, so glad to have him be a part of the hearing this year and for his what he will bring as far as his questioning and his comments that as we move forward. So today we welcome Chairman Massad. Thank you for being here with us. I understand you've had a full day today, so welcome for the afternoon session. But we look forward to discussing CFTC's FY 2017 budget request of $330 million, and of course other matters that are related to the Commission. The CFTC's budget has been a topic of much talk over the past few years, fueled by a significant annual budget request. As we saw, the White House yesterday supports a doubling of the CFTC's budget to $500 million by FY 2021. This proposal is within the context of CFTC's having already received significant increase of more than 123% since the financial crisis. For FY 2017, if fully funded, this request would increase CFTC's budget by 195% since the financial crisis of 2008. The agency has more than doubled in size in a matter of a few years. The President's goal of quadrupling the agency in just over a decade ignores the nation's crippling $19 trillion debt. And as I mentioned last year during our annual budget hearing, the continued pattern of submitting excessive budget requests seems to be a political mover that actually moves the goalposts. These are the kinds of statistics that this committee has to look at, has to examine as we move forward and we determine where we're going to invest additional monies. The subcommittee's jurisdiction covers a number of agencies, as you know. Of course, CFTC, as we're here today, but also the Food and Drug Administration, a vast majority of the U.S. Department of Agriculture. USDA alone is asking for almost $800 million in increases, and the FDA is asking for another increase this year. I want to emphasize that nearly every agency that is putting forth a request to this subcommittee, they can justify in some way why they need a bigger budget. For FY 2016, the subcommittee had to consider additional funding increasing for the CFTC in light of other critical needs, such as the growing humanitarian and refugee crisis in the Middle East. Also, the needs of the FDA to implement the Food Safety Modernization Act and providing funding for the highly pathogenic avian influenza. And of course keeping the lights on for families in rural housing throughout USDA's rental assistance program. Each of these areas deserved a hard look for increases, and when compared to years in the past, these were tough decisions that the committee had to make. This being said, it should be noted that CFTC has made some improvements in how it regulates the markets and improved some uncertainty for market end users. This includes your ongoing work on the swap dealer de minimis rule, moving forward on the cross-border equivalency. Since your time as chairman, you have addressed a slew of unresolved regulatory issues left in the wake of the Dodd-Frank enactment, but there's, of course, still ways that progress can be made. I am particularly appreciative of the cooperation between you and your team and our staff in providing updates and working with us as we resolve critical issues. With all that said, there are many issues that we need to look at a little closer, including the budget request for this year, various regulatory issues, and CFTC's management issues. You also mentioned cybersecurity in your written testimony, and I agree that this is a very important issue. And the committee has provided $282 million since FY 2011, particularly for information technology. It was a bit disappointing to see that the President's request did not include money or requested money for that set aside for IT, but under this budget request, CFTC spending will increase 32%, and this is the 8th consecutive double-digit increase that has been requested since 2008, and we'll discuss that a little bit further as we move forward. Also, we will touch on a recent ruling requested by this subcommittee from the Government Accountability Office, and which resulted in a potential violation in the Anti-Deficiency Act. This pertains to an accounting issue that culminated in the agency's financial auditor retracting 10 years' worth of financial statements. Congress had to fix this issue in the FY16 omnibus that resulted from action taken by a prior CFTC chairman. At our annual CFTC hearing back in 2013, this subcommittee originally raised the issue of the CFTC's leasing practices and costs. When it discovered what it was discovered led to the investigation by the agency's Inspector General, the GAO's own leasing audit, and the recent GAO legal opinion showing that CFTC potentially violated the Anti-Deficiency Act. In addition, this subcommittee has noted for years that the agency's leases are significantly higher than what they should be and have resulted in excessive cost. The CFTC's Inspector General confirmed these suspicions a few years ago. Since Dodd-Frank, the agency's numbers of personnel has increased by 18%, while annual leasing costs have increased by a staggering 74%, an additional $9.3 million per year in leasing cost. These leases were negotiated based upon funding assumption rather than on actual appropriations. This subcommittee requested the initial review by the CFTC's Inspector General of the agency's leasing costs and followed up with a review by the Government Accountability Office. The bottom line in this one case and in future example is for agencies to be great stewards of limited resources. Finally, we will discuss various rulemaking and other regulatory issues that are raised by our members. I cannot agree more with the statement that is in your written testimony that you said sensible regulation is essential, quote unquote. How to define sensible within the context of current or future regulations is often what is up for debate. Whether the Commission needs more money or not may in fact be a valid question. This subcommittee's goal remains to get past the rhetoric and into the nuts and bolts of the agency's actual needs. How these budget increases actually resulted in preventing another financial crisis. The implication of some is more money for this agency will prevent another meltdown. The question is, what metrics prove this theory? These are all questions that we will ask and we will look at in this budget request. CFTC has received some of the largest increases across the federal government at a time of fiscal belt tightening. Before I proceed, I do want to take just a minute to share the themes that we've set out for the subcommittee this year. In summary, there are basically four things: outcomes, vibrancy, support, and protection. In particular, number one, increasing oversight efficiency and need for effective outcomes. Number two, keeping rural America vibrant. Number three, supporting American farmers, ranchers, and producers. And three, protecting the health of people, plants, and animals. Theme number one builds off our oversight activities over the past several years. It's about streamlining, it's about strengthening and simplifying programs, improving accountability, supporting effective programs for which the government has a clear and unique role, ensuring appropriate staff levels, and prevent burdensome regulation. For CFTC, this ensures that money is being spent properly on leasing costs and that the limits unionization has placed on its ability to hire more staff. Theme number two is about making smart investments in vulnerable populations and critical utility infrastructure, assisting rural businesses with unique economic challenges, and making it a priority to fund those things that help grow the economy and jobs. I want us to provide relief to financial end users and make sure families can stay in their homes. Theme number three is about the constituents that we represent. This includes providing opportunities to them through domestic and international markets, ensuring free and fair markets, supporting science and research, and ensuring the safety net is there for those who need them the most. And then finally, theme number 4 is about ensuring a safe and healthy food supply, controlling and eradicating plant and animal pests that threaten our industry, delivering nutritional assistance to the vulnerable populations, and the efficient use of funds for nutrition research and education. Many of the end users are producers of an abundant food and drug supply. So our subcommittee literally touches the lives of every American in one way or the other, and in some regard. And certainly I'm honored to have a chance to chair this subcommittee as we do exactly that. And I look forward to a fulfilling year as we move forward in looking at the budget for FY17. Now I'd like to yield to the distinguished ranking member from the state of California, Mr. Sam Farr, for any comments that he would like to make.
Well, thank you very much, Mr. Chairman. I think I get that distinguished label now that I've announced that I'm retiring. But thank you very much. Thank you for your starting these hearings early and starting off in this very important arena. And thank you, Mr. Chairman Massad, for your leadership. I want to commend the CFTC for the great work you've done over the years. We kind of zoom through this budget very quickly, and at the end we always seem to cut, squeeze, and trim it. And I think it's what I would really hope that we might do this year, instead of play gotcha, is that we really think about why it is so important to meet the requests that the President has made in this budget for your mission. And I hope in your remarks you'll talk a little bit about that. There are counting bookkeeping issues, as the chairman talked about. But it seems to me you've always been forefront. Your agency's always been forefront about every one of those things, never tried to hide anything. There was no embezzlement. There was no misuse of funds. It was accounting errors, procedural errors. And frankly, the amount of money involved is de minimis compared to what the mission is here. And I hope that we don't let the details ruin the mission. And I was kind of surprised. I mean, I looked at the report that the GAO did, but it also admitted that this has been going on for 22 years and they never found it. So I think there's some responsibility here for the GAO, who's failed to be the watchdog on this. But I saw the movie Big Short this year, and it just made me. These are always complicated issues, and it was interesting how as everybody who went through that period, even in that movie, they did a very interesting way of describing what was happening as, sidebars, little vignettes of activity, a very clever way to sort of let the audience know how to understand these complicated financial instrument terms and actions. I think that's always the same thing that happens with you. I mean, with your commission. It's a very esoteric field. Most people who invest in markets don't do it in derivative swaps, don't do it in commodities and so on, and therefore don't know how important it is. I mean, as I understand, it's $1 trillion a day, almost business, working day, and that's a lot of money. And what happens is the rules that you're enforcing are the rules that Congress wrote in the Dodd-Frank bill, and we wrote it and said, this is what you got to do. And now that you're doing it, you're getting dinged because some people on the outside don't like having to, do the paperwork and don't necessarily want to be monitored. But it seems to me if we don't do that enforcement, if we don't be that cop on the beat or the referee in the game, which your responsibility is, my God, the losses in this to people that are not going to understand what happened. And I think it's going to get back to Congress, who sat there and needled away at your budget year after year. And yes, you have had increased requests, but I don't recall that we have ever really honored much of that request. In fact, I was told that of all the federal agencies, you've been the one that's gotten the most consistent across-the-board cuts. It's averages about 26% a year from the requests the President made to what Congress funds you. So as we go into this, I hope it's not a cat and mouse game. I hope that we can begin, Mr. Chairman, because I think this is what this committee is. If there are differences on how to operates this agency. Let's solve those problems so that the agency can do their work, what they're mandated to do in the Dodd-Frank law. And hopefully we'll get that done this year and get off this you ask and we cut, and that's it, and you got to live with it. Because you wouldn't have had all these vacancies at all had you gotten the money that was necessary to fill those vacant spaces, because that's what you thought you had to do. And frankly, at the time, the Democrats were in the majority in the House. And we would have, right after that, we would have honored your request. It's the next the party that ended up cutting it. So I hope we get away from cut, squeeze, and trim and get into let's fund the mission enough to be able to do the mission. We certainly, that's the argument we give for the military. Let's do it for the CTFC. Thank you very much.
Well, Mr. Farr and Chairman Massad, we'll turn to you now for your opening statement. And again, we appreciate you being here.
Thank you, Chairman Adderholt, Ranking Member Farr, and members of the subcommittee. I am pleased to be back to discuss the President's fiscal year 2017 budget request for the CFTC. For FY 2017, the Commission is requesting $330 million, an increase of $80 million over the 2016 enacted level. Mr. Chairman and members of the committee, in the aftermath of the global financial crisis, the work of the CFTC is more important than ever and critical to the U.S. economy. Thanks to our dedicated staff and to the constructive and collaborative engagement of my fellow Commissioners Bowen and Giancarlo, we are bringing important, sensible regulation to the derivatives markets. We are working to make sure that the rules required of us by the Dodd-Frank Act concentrate on the areas of greatest risk, and that commercial end users are not unfairly burdened and can continue to use these markets effectively and efficiently to hedge routine commercial risk. We are seeking to address new and emerging risks in our markets, such as cyber attacks, perhaps the single greatest threat to the orderly functioning of our financial system today. And we are looking toward the future, taking action to address the potential for disruptions from automated trading, for example. The Commission is also working successfully to harmonize regulation with our fellow domestic and international regulators. Here, let me pause to note the important announcement that Commissioner Jonathan Hill of the European Commission and I made this morning regarding clearinghouse regulation. After years of negotiation, we have reached an agreement that resolves the equivalence issue and will ensure that European and U.S. clearinghouses can continue to provide clearing services to firms in each other's jurisdiction. It will help ensure that our global derivatives markets remain robust while keeping our financial system as stable and resilient as possible. It is also a significant milestone in our cross-border harmonization effort. Finally, the CFTC is engaging in robust enforcement, which is the most important thing we can do to ensure these markets operate with integrity and that the public is protected from fraud. But sensible regulation requires resources, and I can't underscore that enough. The increases the CFT has received in the past are appreciated and were well used. For example, the fiscal year 2015 increase allowed us to take some steps to improve our information technology capabilities and to bolster our staff in critical areas like enforcement and surveillance. But the Commission's budget today is simply not commensurate with its responsibilities. Those responsibilities were vastly increased as a result of the global financial crisis, a crisis which caused trillions of dollars in damage to our economy and untold suffering to American families. And our responsibilities have increased because the traditional markets we oversee have grown substantially in size and technological complexity in the last few years. The United States has long had the best derivatives markets in the world. They are the most robust, dynamic, and competitive. The budget we are requesting is critical to keeping them that way because successful markets require effective oversight, including proper examinations, surveillance, enforcement, and the other core activities we engage in. Of the $80 million requested increase, approximately 36% would be dedicated to information technology investments, critical to the Commission's activities, such as market, financial, and risk surveillance, data collection and analysis, and enforcement. This will help us keep pace with an industry that is changing and innovating at the speed of light. and that is much larger and more complex than even just a few years ago. It will help us to improve our IT infrastructure and our surveillance capabilities. The remaining 64% supports an increase in staffing and related support with a particular focus on highly critical areas such as surveillance, enforcement, and examinations. For example, it will increase our ability to examine critical market infrastructure such as clearinghouses and exchanges. It will increase our ability to go after bad actors so that we fully protect customers like farmers, retirees, and commercial business, and preserve the integrity of our markets. And it will ensure that we can be even more responsive to the concerns of commercial end users. Finally, I would like to point out that our budget request is a fraction of the amount this agency has added to the U.S. Treasury in recent years as a result of our enforcement actions. Last year, for example, we collected over $3.2 billion through enforcement efforts, or an amount equal to over 12 times our budget for that year. Mr. Chairman and members of the committee, I believe this budget request is a good investment in making sure our derivatives markets continue to work for American farmers, ranchers, businesses, and the American economy. Thank you for the opportunity to testify today, and I look forward to your questions.
Thank you, Mr. Massad. Thank you for your testimony. We'll continue now with the question portion of the hearing. I'd like to walk through some of the agency's budgetary increases that have occurred over the past few years and some statements for the record explaining how and why these have come to pass. Going back to FY07, the agency had a budget of just less than $100 million. By FY10, our minority counterparts had increased the budget to $169 million. And in describing these actions, they noted that, quote, CFTC will have received a substantial 44% increase in its appropriated funding in just 2 years, quote. Today, CFTC's appropriation stands at $250 million, with the Republican-controlled Congress providing an additional increase of 123% since the financial crisis of 2008. In FY11, after Republicans took control of Congress, the President submitted a budget request of $261 million. That request grew to $315 million in FY14, but it was back down to $280 million for 2015. This year, the President set a new record at $330 million and is asking for $500 million over the next 5 years. These requests really, as you can see, seem to be all over the place, and it's difficult sometimes to separate reality from politics. My minority counterparts thought 44% was substantial. Now they don't seem to think 123% is anywhere near enough. Haven't you set year-over-year records for enforcement actions and collection of monetary penalties in billions of dollars in the past few years? Is that true?
Yes.
Have you been able to meet your hiring targets with the increases that have been provided you?
By hiring targets, Mr. Chairman, may I just ask you to clarify what you mean by hiring targets?
What's your full-time employee levels?
Well, we set a level based on the budget that we're given, and we operate to meet that. So yes, we operate to meet that. If you're asking me my target in terms of what we need, I would say no, because we don't have the budget for that.
But the budget is at the highest level in the Commission's history. Is that correct?
Yes, it is.
So can you understand why some members, especially on my side of the aisle, may feel that the budget requests have been a moving target that sometimes may be motivated by politics rather than reality?
Mr. Chairman, I certainly appreciate that we have received increases, and we're very grateful for those. But I think it's important to step back and look at the big picture here. Our responsibilities were dramatically increased by Dodd-Frank. We had jurisdiction over the futures and options markets, and we were given jurisdiction over the over-the-counter swaps market, a huge global market, a very well-developed global market that all the major banks are the major participants in, that covers a wide variety of products and activities. That's, depending on how you estimate it by notional amount, and I agree notional amount is just one measure, that is estimated anywhere from $300 to $400 to $600 trillion worldwide. Futures market was about 30 trillion by notional amount. Secondly, the futures market itself has dramatically changed. Trading is more automated. The number of contracts actively trading has increased substantially, and volumes are up, margins are up. So all those changes are very dramatic. And if you look at our budget, say since Dodd-Frank, our budget in the first year after Dodd-Frank was $200 million. And in those 4 years, it's increased from 200 to 250. That's less than a 10% increase a year. And when you factor in the costs of simply cost increases and what it costs to do business, our employee number has not increased dramatically since 2011. So what does this mean? What this means is, we all know now we've made clearinghouses more important, and cybersecurity is on everybody's minds. We can't do the examinations we need to be doing on cybersecurity. We all know that with automated trading, the way that trading has happened, the way manipulation has happened, it's much different. We need much more sophisticated IT systems, data analysis, and experts to be able to track that. You have to look at huge volumes of message data to track that. We know that the number of products has increased. We have a market surveillance staff of about 50 people. We have 40 physical commodities. They're all different. The oil market isn't the same as the cattle market, which isn't the same as the corn market or the soybeans market or the lumber market. Plus, we've got financial futures on interest rates, currencies, equities. Then we've got the swaps market on top of that. And the swaps market not only has a wide variety of products, swaps are executed on many, many platforms, and it's done around the world. So I recognize we've gotten increases. We're grateful for them, but I think we've got to look at the big picture in terms of what this agency is being asked to do and decide whether we want to continue to have the best derivatives markets in the world. Because if we do, we've got to invest in good, sensible regulation.
My time is up, Mr. Farr.
Let me just follow up with that. I mean, in essence, I would imagine that you look at the market growth and you come up with a plan of what is it going to take to be responsible actors in this highly volatile field. And with that plan, you decide how many people you're going to need to do the examinations and so on. So I think the question really ought to be is, because you didn't get the money you were asked for, how many examinations that you had originally planned you couldn't do, and to junk them?
Excellent question, and the answer is many. You know, we set the budget, or we set our examination plan based on the budget. But just to give you an example, because you're exactly right, in the area of examinations on clearinghouses, we are required by law to do an examination annually on the 2 largest clearinghouses that have been designated systemically important. But even for those examinations, there are lots of things we would like to be examining every year. But you have to choose what the scope is. You have to limit the scope because we don't have the people. So, you know, the question is, are you going to look at cybersecurity this year? Are you also going to try to look at margin methodologies and financial resources? But what about liquidity? What about governance? You know, there's all sorts of things you'd like to look at, and these are very time-intensive examinations. Plus, we're not even doing examinations on some of the smaller clearinghouses annually. We don't have the money. We now have a lot of activity going on abroad, and we try to work with our foreign regulators, counterparts, on these, but we would like to be able to have...
Weren't you very successful on one of those and got an incredibly high fine, which you didn't get any benefit of? It goes into the U.S. Treasury.
We've gotten very high fines on a number of actions, and our goal is not to just get the highest fine. Our goal is to bring the cases that we think will serve to really show people
so
that they've got to
even though your budget's been cut, you've really, how much do you think you've gotten?
Well, again, the fines that we collected this past year were about 10 times our budget, and over the last 5 or 6 years, I don't have the number at my fingertips, but we've also collected penalties and fines several times over what our budget is. So, you know, we've paid down the national debt.
Thank you.
Mr. Yoder.
Thank you, Mr. Chairman. Chairman Massad, great to have you before the committee.
Good to see you, sir.
I continue to hear good things about your efforts to work with the industry and to try to have great oversight in a way that is a partnership as opposed to adversarial. And I think those great things are, I'm glad to hear that. So appreciate your work. I think just to sort of interject this conversation that the chairman and the distinguished ranking member are having is not to say that the resources that you're asking for may not be needed, and that it is expensive to do the type of complex oversight you're trying to do with international markets. You certainly need technology upgrades to be able to do that, and so I think we understand the needs you're bringing forward. You also understand that we have a very tight budget situation, and a dollar that goes to you can't go to some other needy program in the USDA or research or something. We're within this ag budget. So I think it's a very reasonable conversation we're having. I think the clarification maybe the chairman's making is that the distinguished member has made the comment, I think twice in this hearing already, that your budget's been cut. And I think we just want to make sure that we're all on the same page, that there's been no cuts to CFTC. We may not be meeting the request that you think would be the proper amount for the CFTC, but by no means has there been a cut. And I think that clarification needs to continue to be made because it continues to be repeated in the hearing. So I think that's just where that's coming from. I have some questions for you, though, I wanted to get to. First, I wanted to talk about the swap dealer de minimis levels. And you know, in the 2016 Omnibus Appropriations Bill, this committee directed the CFTC to set those limits at $8 billion while it continues to study the issue. And I guess my question is, does the CFTC intend to comply with that provision in the Omnibus Appropriations Bill? Because I think that'll give market certainty and will ensure that the market participants won't be subject to an arbitrary and disruptive drop in the de minimis level.
Well, we take that report very seriously, and I've visited with the chairman a couple of times about this, and let me tell you what we've been doing on this front. I thought it was very important that we have an analysis of the facts here. When the rule was first written and these levels were set, there was very, very limited data available. Today we have a lot more data because we are creating this reporting system to collect data on the market. So we did a very extensive analysis of the data and what would happen if that threshold falls. How many businesses might be affected, what would be the effect on coverage, and obviously you're making estimates. You don't know how market participants will react, but still, we were able to come out with a study. We also then asked for public comment on that study. We asked for public comment on the methodologies, on the data, on the policy issues. The study didn't make any recommendations. And we heard from members of Congress on this study. So we're taking all that in. We're looking at all the comments we've received. We'll come out with a final study. And that will then give all of us as commissioners the information and analysis we need to decide whether to take action and what action to take.
So do you intend to comply with the $8 billion threshold
well, again,
while you're studying it? What's going to happen while you're studying, I guess?
Well, we would have
market certainty on this issue. Go ahead.
Sure. We would have to do a separate rulemaking, which would require a study for that rulemaking. So that's why I've been trying to do the study first. Let's get the study done.
And you think that'll be done before it
Yes.
is set to drop to $3 billion?
Absolutely,
So
it will.
while we can't give market participants tell them what it's going to be, you think you'll at least be able to do the research before the drop were to occur?
Absolutely, sir, and I understand the importance of
Yep.
providing
Certainty.
market participants with certainty. I've tried to do that across the board in a number of areas.
Wanted to highlight the issue of equivalence. I saw your release announcing
Yes.
the agreement on equivalence. This has been going on for 2 years, so certainly it was starting to look like we were going to see serious market disruptions if we didn't have an agreement soon. Can you explain what this agreement means, particularly for market participants that want to access U.S. markets? And can you assure market participants that this agreement will allow them to continue using U.S. markets and remain in compliance with EU regs?
Yes, it will. The agreement we've announced this morning is very important in that it does set forth the process by which Europe will deem us equivalent and recognize our clearinghouses, and the process by which we will adopt what we call a substitute of compliance determination, so that clearinghouses on both sides of the Atlantic can continue to provide services to firms in the other's jurisdiction. So market participants from today on can continue to clear at either, CCPs in either jurisdiction, whatever they choose, with confidence. It did take a long time in reaching this agreement. It involved a lot of extensive analysis and sharing of data. We were trying to look at our regimes, and truthfully, what took place here was the Europeans wanted to use this process to look at how we could harmonize some of the differences, and we've done that. We've agreed to make changes, as have they. It was a compromise, and I think it's a very good compromise. So now we finally got it done. Now we're in the implementation steps. The European Commission, Commissioner Jonathan Hill, as well as their regulatory body, ESMA, has assured me that they can implement all this in a timely fashion, and so I think we're in excellent shape.
Mr. Laurel.
Thank you very much, Mr. Chairman, and welcome, Chairman Massad.
Thank you.
It's good to see you again. Let me make a couple of observations. CFTC is a regulatory agency.
Yes.
Mission is creating open, fair, transparent markets. We want to avoid systemic risk, protect market users, consumers, public from fraud, manipulation, abusive practices related to commodities, futures, and swaps markets. Okay? The scope of the Commission's oversight was greatly expanded, as you pointed out, with the passage of Dodd-Frank. It included $400 to $600 trillion swaps market. Under Dodd-Frank, CFTC received the largest expansion of responsibility of any agency. And your effort and your mission is critical as we look at unscrupulous financial actors whose behavior led to 2008 the loss of $20 trillion in GDP. Let's talk about scale and being penny wise and pound foolish. Despite slight increases in overall federal spending levels in the 2016 omnibus, we have been refused here to provide modest increases to CFTC. We've never funded the CFTC at the level that allows the agency to meet its responsibilities. Let's look at last year's funding of CFTC as a proportion of the total derivatives market is a minuscule fraction. 0.000000625%, or 6.25 millionths of 1%. What are we talking about here? This is mind-boggling. In addition to, let's take a look at the SEC. Now, the SEC, Security and Exchange Commission, it's responsible for similar kinds of economic activity, has more responsibility with some other groups, but it's a similar size of economic activity. It has a budget of 6.5 times the size of CFTC's budget. That is are we thinking logically about meeting the need and the demand in order to avoid risk, and risk that is substantial in terms of our financial institutions? Now, has chronic underfunding impacted FTC's enforcement capacity? How does it impact your surveillance and monitoring of what are quickly evolving markets? I'm going to throw in this last question as well with regard to, rather than going through this process every year, quite frankly, ad nauseum, the President's budget includes CFTC a collection of user fees to offset the cost of appropriations, not unlike the Federal Trade Commission, Federal Communications Commissions, TSA, Customs and Immigration Service. My colleagues and I, several of my colleagues and I have introduced legislation to do this in the same way that the SEC does that. With any user fee, there's concern that they will discourage trade trades and harm market participants. So the additional question is, do you think a small user fee would impose any real burden on market participants?
Well, thank you, Congresswoman, for the questions. First, on the issue of fees, I think we could certainly be funded by some sort of fee. I think you could implement that practically. You could phase it in. You know, it's done with basically just about every other financial regulator. I think every other financial regulator has some sort of fee or assessment that funds its work. And you know, the advantage of that, of course, is that the market participants are paying the cost as opposed to the American taxpayer generally. But again, as I've said before, my desire is to get the budget up however Congress wants to do that. Even with fees, Congress can set the level of the appropriation, as it does with the SEC. But if Congress wishes to continue with just appropriating us money, that's fine too, but you know, we need to get the budget up. As far as how the budget impacts us, you asked in particular about surveillance and enforcement. It's very easy to explain. I often use the example, you know, the days when we could engage in surveillance by having a couple of people watch physical trading pits and seeing if someone pulls their earlobe, you know, are long gone. All the trading in our markets is electronic.
Not here.
Most of it's automated. It's very complex. You have to have very, very sophisticated IT systems to analyze that, to process reams and reams of data. On top of that, you've got to develop sophisticated analytical tools. We develop our own tools for this. We can't just go, you know, to Radio Shack and buy some program that's going to work. We have to develop our own tools as to how we're going to do this. Plus, we have to have experts in all of these markets to be able to really analyze what's going on. You know, in enforcement, same issues. There are so many things going on. You know, we're getting lots of tips now about things that we want to investigate, but we don't always have the resources to pursue everything. And this ranges from the very sophisticated electronic spoofing strategies that people might be using to very traditional kinds of things, precious metal scams. We had a whole series of cases where we put a lot of people out of business. Hopefully some of them will eventually go to jail for precious metal scams perpetrated against retirees. And we've put people in jail. I mean, not we ourselves, but working with DOJ. There have been over 300 people that have gone to prison in about the last 10 years or so as a result of the CFTC's work. But having said that, we're constantly faced with making hard choices about what cases we pursue. And having enough cops on the beat is the key to maintaining the integrity of our markets and maintaining our markets in a way that they will attract participation from around the world. That's what we're known for in the U.S. We need to maintain that.
That's what our job is to make sure you can carry out your regulatory function. Thank you, Mr. Chairman.
Mr. Palazzo.
Thank you, Mr. Chairman. It's great to be on this committee. I appreciate it. I didn't know I was going to be up next. Well, I did. Someone told me. But I'm going to keep my remarks tight. You know, as a CPA and just seeing this budget, I could probably come up with all kinds of good stuff to talk to you about. I would like to kick it off. I know KPMG put out a report, and they had to go back and qualify some previous statements. I won't really get into that and, you know, the accounting for leased assets and things of that nature. But what does concern me is they did say there was a material weakness in your internal control. And by that, it means in the normal course of business that you would not be able to identify misstatements in your financial records in a quick manner because of possible management internal control deficiency. Can you address that real quick? And what are y'all doing? I mean, because I think y'all acknowledged it, which was great, because you know it was mentioned earlier that y'all are open and you know, candid with the things that have happened at the agency. But what are y'all doing to kind of close that? Because internal controls is extremely important.
Absolutely it is, Congressman, and I take it very seriously, as do our staff. And let me just note, we've had 9 years of clean audit reports and clean internal controls opinions on the quality of our internal controls by KPMG. What happened pertain to this one specific issue on lease accounting, and it's very important. It's important that we fix it, but if I can just take a minute to explain it, because it does go back to 1994, even earlier. Congress gave the agency the ability, express authority to enter into multi-year leases in order to save the taxpayer money, because obviously if you get a multi-year lease, you're going to do better on your rent than if you get a one-year lease. The agency did that. It obligated and recorded that first year's rent payment for that year, and it disclosed in the footnotes of the financials all the future payments. That's what we did every year, long before I got there, but over several chairmen, they would obligate the current year payment and disclose all the forward year payments in the notes to the financials. KPMG signed off on that for 9 years, as did other accounting firms. The IG signed off on that. GAO recently was looking at some things. They asked us some questions. We cooperated with them, and they said, no, 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 you should have done it differently. You should have obligated the full forward amount. Take all the years. If it's a 10-year lease, add up what you're going to spend over 10 years. Obligate that in the very first year and record that amount. That led KPMG, who had signed off on our practice, to decide, oh, I guess we didn't get it right either. And so they said what they said. But their report on internal controls only cites that issue. This is an issue we want to fix. We immediately notified Congress and our auditors when the GAO raised this with us. We appreciate the help of members of Congress in addressing this for this year. We got a temporary fix on it. Now that the GAO has issued its final opinion, we want to fix it permanently, and we're prepared to do that.
Well, the good thing, one of the principles of accounting is consistency. So I guess if you're consistently wrong, it's you're still adhering to an accounting principle. My second question would be, you mentioned in your report you're asking for $17.1 million increase in data technology and storage, increase in 11 full-time employees, and you're planning on doubling your storage by up to 50%. And I was just curious because I'm kind of familiar. We have basically DHS stores. They went through a consolidation effort. They store a lot of storage at Stennis Space Center. They've got the supercomputers and the excess storage space. And I was just wondering, what are your thoughts on how are you going to store this data? Are y'all consolidating? Are you trying to create something totally new? Are you using other government agencies that already have the resources? They're just looking to rent some space to a fellow government agency at a more affordable cost. Just walk me through that whole process.
Well, we're looking at whatever is the most efficient way that we can do this but still achieve our objectives. And the reason we need to expand it is because we are now required to take in so much more data, whether it's on swaps, because the law requires the reporting of all swaps, so we're creating this system to get all that information. But also, as I said, in the traditional markets, for years, we've gotten what we call a complete transaction tape on the futures market. So we know every single transaction. We can look at, exactly what happens by the millisecond. But today, you need to not just look at transactions, you need to look at messages. So if someone puts in a bid, but then they cancel it, you need to look at that. Why do you need to look at that? Well, let me give you an example. One of the cases we brought recently, alleging that someone engaged in spoofing, this person or his firm put in, over a period of time, over 400,000 orders for transactions, almost all of which were immediately canceled. They only consummated 371 out of over 400,000. We had to reconstruct all that, look at exactly how they traded. That requires huge, intensive data capability. Now, as far as exactly where the servers will be and, can we share with other government agencies, I think we pretty much need to build our own capacity, but I'm happy to get back to you on, whether there are ways that we can maybe use someone else's. We've certainly cooperated with other agencies on a number of data initiatives, and be happy to get you more details on the specifics of that.
Well, Please do, and because data consolidation is very expensive. Storage is becoming a huge price component for a lot of agencies, and if there's something already out there, why replicate the wheel? And it's Homeland Security, so your information is definitely going to be sensitive and protected. So thank you.
Ms. Pingree.
Thank you, Chairman Adderholt, Ranking Member Farr. Thank you to the Chair for being here today. It's been fascinating to hear some of the situations that you encounter. And frankly, I just want to echo some of my colleagues on this side of the aisle. I think we're all so clear about how the FTC plays such a critical role and how much we depend on the oversight work that you do. I know my colleagues across the aisle have said, we're not cutting you here. But I think we've said over and over again, we've given you such a big mission. We have such high expectations after the financial crisis. And I don't want to see this agency in a position where, there's a giant scandal, a Bernie Madoff of your world. And we have to say, well, why weren't we supplying you the sufficient resources to be the watchdog we expect you to be? So I want to just give you the chance to talk about that a little bit more. You've mentioned so many places where there's a need, and I want to, commend you on the agreement that you came to this morning about the common approach for CCPs with the EU, and talk a little bit about both what you've already discussed and where some of these challenges are that you are insufficiently funded for, but also this agreement with the EU and what it's going to take to resource that. It would be too bad to have a big success this morning and then realize, there's no there. So if you want to use your time just to talk about that, would be great.
Yeah, on the agreement this morning, so what that does is outline how we're going to work with Europe going forward on the regulation of clearinghouses, because we now have a handful of clearinghouses that are really globally significant. And we've required more central clearing of transactions. That's a good thing. That allows us to monitor and mitigate risk better than where we were in the financial crisis, when we had sort of this spider web of bilateral transactions and no one really knew what the exposures of one institution were to another. So we're moving a lot of that into central clearing, but of course that means we've got to be very vigilant about the central clearinghouses. And my principle in this negotiation, one of my principles, first of all, has been we need to work together as regulators. I didn't want to go down a path where we said, well, if it's on your soil, you just oversee it and we don't need to know anything. That's not the right way. We need to be communicating and interacting, because our institutions, our big banks, our big clearing members are very active in those clearinghouses. And so if they have a problem over there, it's going to hit us. So we need to know what's going on. And Europe needs to know what's going on in our clearinghouses. So we're working out that arrangement. We're also making sure, we're also looking to harmonize some of our regulations. And the purpose of that is we don't want to create opportunities for what we call regulatory arbitrage, where people move business or where clearinghouses compete. And it's kind of a downward competition, right? Because they compete with one another to attract business in a way that undermines stability. So we've agreed on some principles that will harmonize our regulation. So it's a very important agreement. I think the rest of the world, quite frankly, a lot of the regulators in Asia were waiting for us to settle this. So now, hopefully, we can work with regulators in other parts of the world to continue to standardize this. On your question of sort of resources, I mean, again, clearinghouses is a perfect example where we just need to have the resources to make sure we're overseeing what's going on. And for example, we do what we call risk surveillance. We only have a handful of people who do this, but we look at the exposure of the clearinghouse, we look at the exposures of the clearing members and large traders, and we look at that on a daily basis. We look at their market risk, we look at their liquidity risk, the concentration risk, meaning if they've got too much exposure to a single player. So we've got a pretty good system for that for the cleared products, the traditional products in our markets, the futures. Now we have to integrate these new products, particularly the uncleared swaps. So we're trying to build out a system so that we can say, such and such firm, whether it's Goldman Sachs or Citibank or JP Morgan or Deutsche Bank or whoever, here's its exposure across the board. And so we can work with Europe and share information so we know when, let's say, a firm is starting to get in trouble, we have a much better picture of what that exposure is and we can act in advance.
Well, thank you. Thank you for the work that you're doing, and thank you for your answer. Yield back, Mr. Chair.
Dr. Harris.
Thank you very much. Thank you, Mr. Chairman, for being here. I have three separate issues. One is follow up on what Mr. Yoder's questions were, is about that de minimis threshold. So the language in the report accompanying the Ag Appropriations Bill last year talks about a study. Now, is that study what you refer to as your report in your written testimony?
Yes.
Okay, so that's the same thing, which says it does not, and I quote from page 9 of your testimony, it does not make a recommendation as to what the level should be, but the language is pretty clear in the Appropriations Bill. I mean, so can you envision it being different than that $8 billion floor?
Well, I think it's up to the commissioners. This is a decision that the commissioners need to make.
Okay, despite the clear language in the bill, you could foresee the commissioners defying Congress here and setting this level lower.
We take very seriously the report and the instruction.
Okay, that's all I ask. I just need to get that clear. The other thing is the retroactivity. Is there any possibility that you'd retroactively apply your finding to transactions conducted this year, even though the report hasn't been
I
here?
don't generally think that, no, I can't see a circumstance where we would, do something like that.
Let me mention, because it's kind of news, I guess, since it was this week, the Wall Street Journal article about your whistleblower fund.
Yes.
With the balance of $268 million.
Yeah.
Which is actually above the appropriated amount for last year for the entire CFTC. Why aren't we using some of that money to do some of the things that you asked for in that increased budget? I mean, your $80 million increase in your budget. Why aren't we using some of those funds, or is that something you think we should be looking at?
I'd be happy to work with Congress to allow us to do that, sir. We're not allowed by statute to do that, but if this committee would like to explore that, we'd be more than happy to do that.
Great, thank you very much. Finally, and this is kind of an interesting thing, and I'm looking at, I guess this is something that came from you all to us, I guess. It's the OIG budget request, page 65 and 66. And the letter from the OIG, the budget request is, an increase. It's a pretty huge increase, actually. They had one full-time equivalent, but the budget request goes up $700,000 or $690,000. But the interesting thing is the overhead increase request, which goes up $149,900 for one additional employee to go from 10 to 11. And the OIG in their letter sounds like they're saying, why are you giving us or budgeting for another $149,900 for one employee when the average employee overhead is $33,000? Now, this letter was sent on January 28th. I don't know when you submitted this budget, but it sounds like you just blew off what the OIG is saying, which is actually we don't need that amount of overhead. Are you unaware of this letter? I mean, it is sent to you.
Yeah, no, we've honored their request.
I mean, is someone in your office? No. Their request. They are requesting one additional staff, and I'm reading from the letter verbatim. And it appears the agency is requesting an additional $149,900 to cover just one full-time employee. And that's not salary. That's the overhead for one employee, which is. And I'm reading from page 65, the lease of space. I assume this is not a corner office in a very expensive building. Utilities, I'm assuming they don't require a whole lot more air conditioner heat. Communications, okay. Printing, supplies, equipment. $149,000 for the, and it sounds like the OIG is saying, I think you asked for too much here. Why didn't you reduce your request?
I'd have to check those numbers. I can tell you that we work very closely with the IG to work on, to make sure we pass on their budget request and we allocate an appropriate amount of overhead. So I need to check on the numbers you're specifically referring to.
But the agency adds the overhead. The OIG doesn't request overhead. The agency, you are the agency.
The amount of overhead we add in total is a very small amount.
It's $479,000 for 11 employees. That's way more than the overhead in my office for 11 employees.
Well, sir,
my only question is, who in your office saw this letter? Here. Do you need me to hand it to you? It's addressed to you, January 28th. Who in your office read this letter?
I'd be happy to look at it and consult with my staff and let you know.
Thank you very much, because I want to know why you didn't address the fact that they are basically saying you asked for $116,000 too much for our office for overhead. And
Well,
then
I
you
think-
come back and say, look, we need this $80 million, and you got your inspector general saying, we don't need this 130. Why did you ask for this?
Well,
Here.
it may be, sir, again, the overhead doesn't just cover office space.
It covers, page 65. I'm going to interrupt you here because this is what you handed out to us. It says lease of space, utilities, communication, printing, supplies, equipment. Here's the letter. You can get back to me. Thank you very much. I yield back.
I'd be happy to look into it, sir. I would just point out that the IG's budget has, and we pass on their budgets. Their budget has increased about 300% over the time that ours has increased by far less.
Thank you, Chairman. I appreciate your time here today.
Yeah.
Thank you, Chairman Adderholt, for the opportunity. I wanted to follow up on Mr. Yoder's question. It has to do with, again, the preliminary report of lowering the de minimis, can't pronounce it today, exception to the definition of swap dealer. Given the objectives of swap dealer registration and after considering the current swaps data available, what reason is there for you to believe that swap dealer de minimis threshold should be lowered?
Well, sir, I have, the rule as it's currently written provides that it will be lowered. I have asked for the study so that we can see whether we should leave the rule as is or whether we should change it. That's exactly why I asked our staff to do the study, and that's what we're in the process of doing. I haven't reached a conclusion yet. I want to get the evidence and get the public input so that I make an informed decision. I think that's my responsibility as chairman.
Okay, because the preliminary report is out already, is the way I understand it, right?
That is
Okay,
correct.
But it has not been finalized, so you're going to wait till then to make the final decision?
Yes, sir.
Okay, and I think I missed his question. I think it had a lot to do with mine, so I'll yield back for right now, and I'll probably come back later.
Mm-hmm.
Thank you, Mr. Chairman. Hello, Chairman Massad. How are you?
Congressman Young, good to see you.
Good to see you. You mentioned cybersecurity. It's a big issue for everybody, right?
Yes.
These are real threats. Can you talk a little bit about if you're hacked or compromised, what do you do? I mean, are you required to report that to the Secretary of Agriculture,
If we're hacked?
DHS? Yeah, if your system
CFTC?
is compromised.
Well, we
and-
would certainly share that with other agencies. Yes, sir.
Okay, so how do you coordinate cybersecurity, not just yourself as a financial regulator, but with other financial regulators as well, like the SEC?
Yes.
Or
That's a good question. Well, there is a lot going on among government agencies, and particularly financial regulators, to coordinate and share information. We meet regularly on this, and we've also established systems so that private industry can share information anonymously on threats or problems they've had so that other private market participants can learn what might be out there, what might be happening. The Treasury Department has taken a lead in trying to convene agencies to share information.
and come about with a common approach between the agencies and the regulators?
Yes, we look at those things. I think a lot of it is really at this point just trying to share ideas, share information, set up systems to share information, do exercises if we had a problem, what would you then do? We do run simulations like that.
Have you had a problem? Have you been hacked? And
No.
have you been?
No,
okay.
we have not. I think our systems are very good. We recently got our latest, what they call FSMA rating, which is the government's internal rating of agencies, and we got a very high score, above 90%, which only a small number of agencies received. But having said that, it doesn't take long to go from 90 to 50 in this world, given that it's a constant arms race. So that's why we need to continue to maintain the investment in our technology.
Thank you. I want to talk a little bit about regulations and access to markets. As you know, commodity prices are pretty low right now.
Yes, they are.
And farmers are doing the best they can to adjust to these prices. For some, there's unimpeded access to derivatives markets, and it's incredibly important for their solvency and future plans to have that access. And I have concerns about regulations overall, really, impeding access for our farmers and our agriculture community. In particular, you know, as time goes over the years, the decades, new regulations come about. Do you have reviews of regulations in which may be outdated or may have been great for the days of analog, but now that we're in a digital age and a newer age, that those regulations are just outdated? Do you have regulatory reviews on this internally?
Yes, we do,
And do you
sir.
share that information with the committee?
Yeah,
or
we'd be happy to come and visit with you on that and explain what we do. We
because
have
we
gone
would
through a
love
process.
to know that
Yeah.
because we're hearing more and more about regulations impeding, you know, access,
Right.
freedom, opportunity, business, and just things that just don't make sense anymore sometimes.
Well, and we recently, yes, sir, we are focused on that, and we recently changed some regulations, particularly with a view to the potential burdens on smaller participants in these markets. We changed some of our record-keeping requirements to minimize the record-keeping requirements that were being placed on a whole host of commercial firms that aren't collecting customer money, that aren't intermediaries, and so forth. That was a change to what we call our Regulation 1.35. I am very focused on the issue of making sure commercial firms, particularly agricultural firms, have access to these markets. One of the things we did in our agreement with Europe on equivalence was that while we agreed that our CCPs would make a change to conform to certain European practice on what we call clearing members' proprietary margins, that change will not apply to agricultural contracts because those contracts really are focused on the U.S. market. There are some smaller clearing members in those contracts, and I was concerned about that potential cost on them and whether they could absorb that. So we're very focused on this issue, and I'd be happy to come and visit with you further on it.
Yeah, I'd be interested in having further conversations with you about that. Thank you, Mr. Chairman. I yield back.
Okay, thank you, Mr. Young. Would like to go back to leasing costs a little bit. Of course, there's been a lot of talk in the press about it, and CFTC's leasing practices overall have been noted, of course, on the Hill as well. It should be noted the actions that were taken was before you were chairman, so you know we're acknowledging that up front. But this largely results from actions that the subcommittee took over the past few years to look into your leasing practices. However, the issues are still outstanding, and the committee was forced to provide a one-year legislative relief to the agency in law for the current fiscal year. You're asking for the same relief again in FY17, and want to begin by a discussion of the leasing costs. CFTC has submitted information showing its leasing costs since the enactment of Dodd-Frank through today. This information showed that since Dodd-Frank, CFTC's annual leasing costs have increased by 74%. That's $12.5 million per year to $21.7 million per year, while its personnel level increased by only 18%, 605 FTE to 714 FTE. The 74% increase in cost since Dodd-Frank translates to approximately $9.3 million in additional leasing costs each year. Over the past 10 years span of the leases, this is approximately $93 million in additional lease costs. Since Dodd-Frank, that means that we spent approximately $56 million on additional lease space with minimal increase in personnel. The FY16 omnibus included a directive requiring the Commission to dispose of excess space and reduce rental costs in each building currently leased by the Commission. The agreement was also directed for you to report back to the Commission on this within 90 days on the steps you're taking. And so just to begin with, tell us a little bit about what this additional space is currently being used for.
Certainly. As you noted, the leases were entered into before I took office, but I'm still doing all that I can to address these issues. First of all, our overall occupancy rate today is 85%, so it's pretty high. That varies by office. In particular, in Kansas City, we have some excess space. Within a couple of weeks of taking office in 2014, I went to Kansas City to look at this, and it was clear we had excess space. And lease decisions were made on the expectation that the staff numbers would increase more than they did, given the expansion of the responsibilities. But that, that didn't happen. So what we did in Kansas City was I directed the staff to come up with a plan to try to deal with this. Now, we don't have the authority just to go out and sublease to any old business or person who needs a little extra space. So we have to go to the landlord and ask the landlord to take it back. We did that. In Kansas City, however, the landlord was trying to sell the building and hasn't taken us up on our offer. We're still trying. We did the same thing in New York. I went up and looked at the space. It was clear we had a little extra space. I said, let's go to the landlord. And, again, if a landlord has a building where they've already got excess space that they're not renting, unfortunately, they're not likely to take us up on an offer to give back more space, but we're trying. That's about all we can do. I can't go out and just sublease it to someone.
What about renegotiating the leases? Has there been discussions about that?
To renegotiate, again,
Renegotiate
that's
the
sort of the
leases.
same thing. I mean, I'm effectively renegotiating by asking them to take it back.
And you've had no success?
Well, they
in it?
haven't been willing to thus far.
The current leases run for at least another 5 years, is that correct?
That's correct.
Okay, last year, Congress provided relief to the commission to correct the accounting procedure, as I mentioned. Could we provide similar statutory relief to get you out of these long-term leases and allow you to renegotiate lower cost for this year and future years that better reflect your needs?
Congressman, I'm happy to talk to you about that. The legislative relief went to just this kind of accounting / federal obligation law or federal recording law issue. It didn't go to the economic terms of the lease. I don't know that there's a way that Congress could do something to get us out of our lease obligations. I'm happy again to visit with your staff on that. I suppose if we had the power to sublease, that would help in the negotiation. But again, I think it was a different issue as far as the language that was included in the appropriations. That went to the federal law on recording and on accounting to deal with the fact that we only recorded the current years, or we only obligated the current year's payments. Of course, if we had obligated the full amount of the lease, I'm not sure the agency, as I understand it, I'm not sure the agency could have had both an office and employees. It might have had to choose between the two.
So you're not by law able to sublease?
I can't just sublease to anyone. My understanding of it is we can only by law sublease to someone who is advancing the mission of the agency. That's pretty narrow.
Oh, so we could change that law, though, in other words?
Yes.
I would think you could.
Okay, that's what I'm thinking, that, and you agree that might be a possible
Well, it would
solution.
help. Now, again, we'd still have to negotiate with the landlord, because I suspect on some of these leases, the landlord knew we couldn't sublease, and it may bar us from subleasing, so we'll still have to negotiate with the landlord, but it would certainly help. Let me just say, when I first took office, even though we don't go through the GSA, I sat down with the director of the GSA to discuss what we might do and whether we could turn over any capacity to them. And maybe there's a way we could do that. I don't know.
GAO is currently working on an audit of your leasing spaces. Has the agency or your agency worked with GAO to provide solutions?
Absolutely. We've worked to provide them all the information they want. We've cooperated fully, as we did with the IG.
Mr. Farr.
Mr. Chairman, I'm very sympathetic to both sides of this argument. I mean, essentially what we've done is allowed them to go outside of GSA, and I kind of support that, having to deal with GSA. I mean, if we're going to look at the amount of space that GSA is leased and not occupied, it'd run into billions and billions of dollars They don't even have an inventory of it, but. And then on the other side is that we allow you to lease a space, but then we limit your flexibility in being able to, sort of back out or find a sublease. I understand that we ought to, and I agree with you, Mr. Chairman, we ought to at least give them the ability to sublease. But I understand that you wouldn't be able to get the revenue from that sublease that.
No, but
goes-
at least it would go back, you'd have to address that too, I guess, but, even if it went back to the general fund, that's better for the taxpayer.
What I'm really concerned about is, more than trying, I hope we can work out this real estate issue. It's, there's enough blame to go around everywhere, and it's, in light of, if that's what we're gonna hang up your budget on as a penalty, I think we're not seeing the forest through the trees. What I'm worried about is the decision we made in the budget agreement, the omnibus budget agreement, was a decision, bipartisan decision, with the administration on what our budget numbers were gonna be. And based on that framework, the president came in under those agreements. I mean, your budget is part of that agreement. Last year's budget, you're asking for more, but the administration had to cut somewhere else in order to give you more. About an $80 million, it's about, 1/3 increase. You lay out very specifically about 5 different points in your testimony here of what that new money will do. Ensuring that U.S. derivative markets continue to be global leaders, to enforce the efforts, including what you just described about spoofing and other technology capabilities, and you need expertise for that. I mean, it might go to the answering the question of maybe your employees are a little bit more expensive. I'm sure they come under the federal thing, but how do you hire a person that can go in and look at that, as you said, very sophisticated ways of, that's really smart intel. You can't just hire somebody off the street to do that. Third, you talked about you're going to need that money, the new money, for critical examinations that are going to, for the clearinghouses, for ability to examine the risk of cyber attacks, which you indicate is probably the most single important threat. That you would be able to maintain with that money, improve the basic IT infrastructure and capabilities of the commission, and most importantly, I think, respond to the concerns of the market participants, in particular the commercial end users. I mean, they're going to be coming to you and needing information that you may not be able to give them. And, you said in here that the last 18 months, the Commission has placed a priority in looking at ways to fine-tune recent reforms and other rules, and some of the members asked about that, reforming the rules to upgrade them, to make commercial firms which are, so they will not be held responsible for the financial crisis. I guess my question is, if we don't give you what you ask, what are the risks going to be?
Well, I think the risk is that we can't do the level of examinations that I think are necessary and appropriate and a good investment in terms of some of this critical infrastructure, like clearinghouses and exchanges. We've seen examples of, problems that you can have.
Try to explain it to your daughter or, grandmother as to what do you mean by examinations and clearinghouses and things like that? What is the vernacular of these risks? I mean, what in the financial world? If you just fail to do what you're required to do in law, what is the worst case scenario?
I think the risk is that I don't know that I want to go to the worst case scenario, Congressman, but I guess the risk is that the U.S. has been a world leader in the quality of our financial markets, and we've attracted participation from all over the world, which is beneficial to all of the businesses in the U.S. that want to use those markets. It creates greater liquidity, greater diversity, greater innovation. And if you start to slip where people see, oh my goodness, did you see what happened at that clearinghouse in the U.S.? Or, oh my goodness, they had a clearing member that failed and no one knew that was coming. Or, oh my goodness, they had someone who was engaging in all this manipulation and spoofing, and it went on for years. Even if that doesn't result in a financial crisis, it tarnishes the reputation of our markets. And that will cause, over time, us to lose the leadership that we've had. And so I can't guarantee, to the chairman's question, I can't guarantee that anyone can prevent the next financial crisis, because you never know where that might be coming from. What I can guarantee, though, is that funding this budget will allow us to do far more in terms of protecting the integrity and the transparency of our markets, which undoubtedly will be a good investment for our economy.
Thank you, Mr. Chairman. I want to ask you a question about the position limit rule. And I've heard from some grain and feed folks in Kansas, agriculture folks, that they're concerned that this might negatively impact them, or will negatively impact them. Specifically, the proposal would dramatically narrow the range of hedging strategies considered as bona fide hedges that elevators use to manage their business risk and to help producers market their crops and manage their risk. Now, I know you've heard repeatedly from these traditional hedgers who are concerned that risk management strategies they've used for decades and that have been considered bona fide hedges always by the Commission might now be subject to drastic change. To take away those proven risk management strategies would increase hedging costs, would decrease hedging efficiency, which I would assume would be the complete opposite of what the Commission would want to do. What are you doing as the Commission moves forward to ensure that traditional hedgers like grain elevators and producers continue to have available the range of risk management tools that they need?
Well, thank you for the question, Congressman. We're taking their concerns very seriously and looking very hard at the proposed rule that was issued. And by the way, that rule was issued before any of the three of us who are currently on the Commission took office. So I think we're all very conscious of the importance of getting this rule right. Congress directed us to do this rule, but we got to make sure that bona fide hedging still works, is allowed. We're not trying to change the markets to limit that. So we're looking at those comments. We've had a lot of meetings with industry participants on this. I chair our Agricultural Advisory Committee. We've had a number of discussions about this. And we're looking at other aspects of the rule as well. One of the things we're doing right now is looking, we'll have, the way the rule works is it tracks the law in that the law provides for bona fide hedging and it provides a set of exemptions. But there are then what we call the non-enumerated exemptions, meaning essentially further exemptions that a participant could get. We're talking with the exchanges right now on what would be the best way to handle that. Rather than just the Commission doing it, maybe we should incorporate the expertise of the exchanges and work with them so that they do, a lot of the review on non-enumerated hedges. We're also looking at what we call the deliverable supply estimates. You got to make sure, you want to set the limit in a way that prevents excessive speculation, but allows the markets to grow and works. And so you want to make sure you get good estimates on what is that market volume today? What is that deliverable supply estimate on a particular commodity? We're spending a lot of time on that. There's other aspects of the rule. I've said over and over, I want to get this right, so we're going to take the time we need to get it right.
Well, I can't tell you how much I appreciate that attitude of trying to get it right and making sure we're taking the concerns of folks back in Kansas and other states that could be negatively impacted by this, that aren't creating risky scenarios but want to be able to protect themselves. And we don't want to do harm in a way that would make the rule sort of counterproductive. Second question is, I wanted to ask you about the regulated automated trading, Reg AT. Commission recently proposed Reg AT, at which the CFTC would require market participants to provide unfettered access to all of the firm's intellectual property and future business strategies to any representative of the CFTC, DOJ, NFA, or exchange for any reason. As you know, a breach of this information would be devastating, as these are trade secrets, and to these market participants and the safety and operation of U.S. markets. Currently, the CFTC needs a subpoena to access that information, that sensitive data, and it's unclear why such broad access is necessary, especially given concerns about the government's ability to keep confidential information from cyber attacks. In fact, based on the most recent OIG reports, the CFTC's most serious management challenge is the need to minimize information security vulnerabilities in its network. How does the CFTC intend to enhance its policies and procedures to protect the highly sensitive intellectual property it currently collects and proposes to collect under Reg Act? And given budgetary concerns and the cost of protecting the data it collects, wouldn't it make more sense for the CFTC to limit its access to market participants' highly sensitive intellectual property and source code cases to where the CFTC is able to obtain a subpoena based on probable cause and wrongdoing?
Well, thank you for the question, Congressman, and I'm glad I have an opportunity to discuss this with you because I think there has been a lot of confusion about what we're trying to do, and I'm very prepared to work with market participants to address this. What we were trying to do was to make sure that what we call the source code for automated trading, for algorithmic trading, is preserved. That source code is a computer code that sets forth how the algorithm would work. And when you have a problem, when you have an algorithm run amok, as we've seen with night trading or some of these other incidents, you need to go back and look at that source code to figure out what happened. And because firms change their algorithms from time to time, the current source code might be different than what it was 6 months ago when the incident happened. So what we're asking is simply that they preserve it. We're not asking them to turn it over to us routinely. We're not asking to file it with us. We just want them to preserve it. So if there's a problem, we can look at it and we can come in and reconstruct events. And I am perfectly happy to make sure that the way we do that guards that confidentiality. There is nothing more important than protecting confidentiality of things like this, because that's important to the integrity of the markets and people's willingness to participate. We take our obligations to preserve confidential information very, very seriously, and we get a lot of confidential information, and so we will certainly do that here.
So you don't believe that CFTC then would ever need to take that source code into the CFTC where it would be on an area that could be sensitive to cyber threats?
Well, we certainly would if we needed to get it, because we're looking at let's say there is a problem in the market and you have a firm that caused some disruption and you need to look at that source code. We will certainly do that in a way that protects confidentiality. We have to do that all the time.
But given the cybersecurity concerns, you can see why these companies would be worried that it might fall into the wrong hands. And that's the source code is their intellectual property. I mean, that's the whole thing for them.
No, I understand their concern. And so.
And then the subpoena question, just in terms of why couldn't we just allow this to continue to be via subpoena based on probable cause?
Well, I'm certainly happy to look at that issue. I'm not sure when you say continue to be. I don't think we're changing what the rules are today. But
yeah, that's the whole point, is that you would be able to receive that information without using. You can already receive the source code now with the subpoena based on probable cause. This would allow you to shortcut that by saying that you want the source code, which is their intellectual property. And to get their intellectual property, you have to have a subpoena now. We're taking comments on this right now, and I'm perfectly happy, as I say, to make sure we've got proper procedures that protect the confidentiality, whether that's a subpoena or whether that's something else. I don't know. I want to hear what people have to say. But also, in terms of our own systems, we are trying to take steps all the time to make sure our systems are staying keeping abreast. I mean, that goes back to our budget. That's why you need money from us.
That's why we need money to keep those systems up to date.
Thanks, Mr. Chairman.
Hey, I know you've had a long day. Let me just close with one more question. Just for the record, of course, the CFTC swap de minimis, dealer de minimis regulation was of course a threshold when a market participant must register as a swap dealer is scheduled to be automatically be reduced by 60% from $8 billion in annual notional swaps activity to $3 billion. This level was will subject a good number of new markets and end users that were never intended to be captured under the Dodd-Frank legislation to register as swap dealers. Becoming a swap dealer should be reserved for big banks and too big to fail institutions. Moreover, it adds 4,000 additional regulatory requirements for these entities to comply with. Many of these job creators, and they had nothing to do with the financial crisis that we saw in the past. The FY 2016 omnibus, we included a provision that directed your agency to keep the swap dealer de minimis level at no less than $8 billion. Preferably, we would like to see it higher. I appreciate your efforts to complete this study and open up the issues for commitment. I'd like to ask you, on the commitment period as on the study that you've recently closed, can you update us on what type of comments that you received?
We received a wide range of comments, and as you might guess, they varied. Some said we should keep it at $8 billion. Some said we should lower it to $3 billion. And we're going through those and looking at people's reasons and suggestions. We asked people not just to comment on that, but to comment on, should we look at a multi-factor test? Should we look at different levels for different product areas? For example, some people have raised concerns that, well, the commodities markets are very different and you need a lower threshold there. Does that make sense? Or does it not make sense because you got firms that are acting across the board and, you want to have some, regulatory kind of certainty, predictability, consistency here. So the comments are wide-ranging, and we're looking at them, and as I say, we'll come out with a final report in a little while.
When do you expect the threshold to drop?
Well, the rule provides that the threshold will drop unless the commission takes action at the end of 2017, in December of 2017. So we've got quite a bit of time here. That's why I started this process early. I wanted to make sure we could go through this study and public comment and getting input well in advance of that date, so that the commission does have the information it needs to decide what to do. And again, we're very mindful of the committee's instruction, and we always welcome input from Congress.
Okay. Okay, well, thanks for being here today.
Thank you.
And like I said, I know you've had a long day, so hope you
Happy to be
are able to rest tonight. So, and with that, the committee is adjourned.
Thank you very much, Mr. Chairman. Do you know when our next, scheduled our next hearing?
Tomorrow.
Tomorrow.
Yes.
We're on a rampage.
On a roll.
On a roll. Thank you.
Thank you.